leaking top insider stock trades every day until they stop us, October 1st. To get this out of the way, I'm going to start with the purchase at Opendoor by a director who bought over $2 million of the stock. For whatever reason, they gave this guy a good deal and let him buy stock at $6.65, which is well below the about $8 the stock was trading at when he made the purchase. So he got a pretty sweet deal. If you can get them to sell you the stock for a 15% discount, then I suggest you buy the stock as well. But I don't think overall it's a particularly high signal insider purchase. A significantly more interesting insider purchase is the CEO at United States Antimony Corporation buying $600,000 of the stock. This is particularly insane because the stock is up 800% in just the last year. He also bought the stock at the end of 2024 and the stock is up 300% since that purchase. This stock has obviously been on a tear and for good reason. They run the only two antimony smelters in the United States and have had non-stop contracts coming out with the United States government. The Trump administration obviously has a lot of interest in both rare earth minerals and the Defense Department, and antimony is very important for the Defense Department, which is why they continue to get new contracts, including 2 new contracts in just the last week alone. On top of that, they mentioned that the revenue is going to double next year, and they just received all the required mining permits in Alaska. So just a ton of momentum and good news behind this stock, and it appears the CEO doesn't think that's going to stop anytime soon. And now for a couple of interesting sales. All 3 of these companies have insider selling, and they all kind of paint the same picture. We have an executive vice president at Costco selling $1.4 million of the stock, the chief HR officer at Casey's General Store selling $2 million of the stock, and a bunch of other insiders also sold the stock back in June. And then we've got another insider selling General Motors on top of the CEO and president who both recently sold the stock as well. These companies obviously rely very heavily on American consumers, so if the economy gets weak or the consumers get weak, all these companies are going to get hit. Costco stock has struggled pretty much all year, and it's still trading at a very high valuation, so this is basically just a bet that the company is overvalued and the stock price might come down. Obviously, if consumers get hit and earnings come down as well, then the stock price is going to have to come down even more just to get to its historical PE ratio. Casey's and General Motors, on the other hand, have actually had really strong years, with General Motors up 30% and Casey's up 50%. General Motors actually trades at a pretty normal PE ratio for them historically, so they're not necessarily overvalued. It's more just that if consumers get hit or they have a bigger tariff concern, if any of those happen and earnings come down, then obviously the stock's going to come down as well. Casey's, on the other hand, is wildly overvalued, at least compared to their historical multiples, but the stock has been super strong and earnings have been increasing, which is why the stock price is up so much. However, in this case, I mean, they're just trading at valuations so far above what their historical average is that I would expect to see that come down at some point. And obviously, if consumers get hit, this stock's going to get hit even harder. But even with constant earnings, they're still trading at such a high price and such a high multiple that it's going to be tough for the stock to live up to these expectations. Find all the top insider trades at CEOWatcher.com.